It's a really good question, though, that Steve's thrown up. Are we looking at the 1970s all over again, a time when stocks were definitely not hot? Now, this is a question near and dear to the heart of our own Larry Kudlow. So we asked two of his regulars, members of the what we call the Kudlow caucus, whether or not stocks are still the best long-term bet. Don Luskin is Chief Investment Officer with Trend Macro, and Jared Bernstein is Senior Economist at the Economic Policy Institute and ACNBC contributor, of course. Gentlemen, thank you very much for your time. Jared, I understand that you say no to this question, whether or not stocks for the long-run strategy is still the best way to be. And Don, you say yes. Don, let me start with you.
Well, I wish you'd start with Jared, because I'm curious to see how he's going to come up with this. If you take the question literally, if the idea is you have to make a decision today, and the decision is what are you going to do for the long term, and you're not going to get a chance to revise that decision. For the next 30 years, what's your investment program going to be? Should that investment program include stocks? How could you possibly say no? What else would crowd out stocks completely? Now, your portfolio doesn't have to be completely stocks. It can have some bonds in it, it can have some real estate in it, who knows, some venture capital, whatever. But I don't see why you wouldn't want to own a piece of corporate America, why you wouldn't want to be an equity holder in corporate America, or for that matter, corporate Earth. That's stocks for the long run. Jared, tell me, why would I not want to do that?
No, I actually think that that's a pretty balanced view. But the way I look at it right now, I think the stock market is fundamentally broken in important ways that we really need to fix. Think of the stock market as a supermarket. And by the way, this doesn't contradict anything you just said, except in the following way. You go into that supermarket, most of the food you pick up is going to be exactly what you think it is, healthy, nutritious. Some of that food, though, in this stock market-like supermarket will kill you. And the problem is that right now, the stock market, I should say right now, over the past business cycle, the stock market has ceased playing its historical role of efficiently and effectively allocating capital to the most productive sectors. Instead, it's been far too characterized by excessive speculation, bets on deals that are highly over-leveraged, and most importantly, risk has been hugely mispriced, giving rise to moral hazards that we're looking at today. Instead of the securitization and the specialization and the hyper-derivatization of the stock market reducing risk, it's actually increased risk and volatility. And in that sense, the stock market is not playing its historical role. You're absolutely right, Don. You can go in and pick, and you yourself have said, it's not a stock market, it's a market of stock. You can go in and pick the right stocks. But the dangers inherent in this market, based on the things I have described, are much, much too present.
So what would you rather be in, Jared?
Well, right now, I'm really not so much picking stocks. I mean, right now, I'd probably look at fleeing to safety and perhaps protecting myself against inflation in the short run. If you're in for the long haul and you're smart and lucky, then you absolutely should do what Don said. The problem is you can be smart and unlucky. The problem is there's so much distortion in the stock market now because of the over-leveraging, because of securitization.
I know. And the Bush administration and all the starving people in Africa and all the problems that you love to talk about. But you know, these problems have always been with us. We had the conglomerate boom in the 70s. We had the junk bond boom in the 80s. We had the tech boom in the 90s. There are always excesses. There's always speculation. There's always problems. There was even this thing called the crash of 1929. And if you bought stocks in August of 1929, the worst time in history to buy stocks, you had to wait 16 or 17 years. But if you were patient, and this is what the question was, stocks for the long term. Yeah. If you waited, you did fine, and you couldn't have done better at anything else.
How long do you have to wait? I mean, that's a great question. You know, how many 3-4 years
well, back
do you have to wait before you make your money?
Back then, you had to wait 16 years. No, that's the answer. But there's never, ever, ever, ever been a bear market.
There's no question. Look, Keynes said in the long run we're all dead. There's no question that if you bought and held forever, you're much better off than if you didn't. Listen to this. I asked my research assistant to do this very simple exercise this morning, and I'd like to hear what you have to say about this. If you go in and you take the annualized growth of the DJIA or the S&P 500 over this business cycle, you will find that stocks grew half as quickly in the 2000s than they did in the prior business cycle or
So
the one
what?
before that.
That's because if you look at the chart of the total return of the S&P 500 and plot it on a log scale, what you'll see is we had a huge upward deviation from trend from 1995 to 2001. We've, over a similar period of years since 2001, we have had the payback. It all averages out for the long term. And that was the question. Stocks for the long term.
If you could buy into the stock market at 1850 and hold to today, you're great.
Don and Jared, I'm going to have to jump in here. I could sit and watch you guys slug it out all day, but unfortunately, we've got a time to keep. Don and Jared, thank you very much for joining us today.